Hello and welcome to Switzer Super TV. I'm Peter Switzer. This is my colleague Paul Rickard. Hi Paul, Happy New Year.
Happy New Year, Peter.
So let's talk about doing a makeover for our self-managed super fund at the beginning of the calendar year.
Look, a great opportunity just to double check things, Peter. I think the good place to start with anyone investing in super, of course, is to check your contributions.
Yeah.
Of course, we have a couple of different caps. We have the concessional cap, and the concessional contributions are, of course, the employer's 9.5%. If you're self-employed, any amount that you claim a tax deduction for, or any amount you salary sacrifice.
Yep.
A cap of $30,000 for most people. If you happen to be over 49, you've got a higher cap of $35,000. So see how you're going towards that cap. If you've got some more money, or you can afford salary sacrifice, see if you can get into your super. Of course, we also have the non-concessional cap of $180,000. That's our after-tax contribution. So the first place to start, I think, Peter, is just to see how you're going on your super contributions.
Okay, what about administration, Paul? That's important to look at.
Yeah, look, something we all probably don't like spending a lot of time on, but we are trustees. We did take on legal obligations. Probably two things stand out. First of all, Peter, have a look at your trust deed, make sure that that's up to date and current, and if there have been any changes, to make sure your trust deed reflects that. But also to double check your investment strategy, make sure that's still appropriate and really reflects the needs of you and your co-members.
And if you're in pension, are you paying yourself the right pension?
Yeah, of course, if you are taking a pension out of your superannuation fund, you need to take out a minimum amount depending on your age. We've got the pension factors on the screen in front of you. So if, for example, you're under 65 and you've got a super balance of $100,000, you need to take out at least $4,000 per annum. You don't have to take it out on a sequential basis. You don't have to be halfway through at the halfway point of the year, but you just want to double check that you're heading towards taking out at least the minimum amount required.
And if you're in transition to retirement, you've got to remember there's a maximum there of 10%, isn't there?
Yeah, maximum of 10%. So for those on a transition retirement pension, minimum of 4%, maximum of 10%. So again, just double check how you're going.
What else should people be thinking about, do you think?
Well, I think the other thing, apart from sort of the super and the administrative responsibilities, is to start really focusing on your investment strategy. We've mentioned before about the document to make sure it's up to date, but look, let's take it down a level. Think first of all about your investment allocation across the different asset classes. How much you've got in the share market, Australian shares versus international shares. What have you got in term deposits or the bond market? Is the mix you have really appropriate to where you want your fund to be and what's going to be the best interest for your members and according to their sort of risk tolerance? If we take it a step lower, Peter, once we've decided how much we want to be in, say for example in the share market, look at how we're allocated across the various sectors. On the screen in front of you, you can see the 11 sectors that make up the S&P ASX 200 and their relative weights. So for example, the financial sector is worth about 40.3%. Do you want to be overweight or underweight, for example, in financial stocks? Yeah,
and also you should be thinking about the stocks or the investments you've had that haven't delivered, whether you actually hang on to them.
Yeah, look, the hardest thing to do, Peter, is to really admit you made an investment mistake. We've all done that and we'll keep on doing it. So sometimes just to stand back from your portfolio, have a look at it. If there are things that there shouldn't be in there, then probably take the hard action and exit those investments.
Good advice. So that's our advice to you at the beginning of this calendar year. Thanks for joining us on Switzer Super TV.